The thing is none of this is cookie cutter, and it's all so specific to the deal because not all capital calls look the same and not all preferred equity infusions look the same. So it really just depends on the cost of capital. But what I will say is that sponsors have the ability to do a great service for their investors by doing these preferred equity raises internally rather than going out into the world and securing a third-party rescue capital term sheet or pref equity investor, because the cost of a market rate pref or rescue capital is going to be a lot higher than what a sponsor, at least a sponsor with good relationships, good reputation, and a strong ability to raise capital, they're going to be able to raise capital internally at a lower cost of capital for that pref than if they go third party. So I like it. I think it's a great thing that a sponsor could do for their investors. We saw it happen even like a year ago or so, earlier in this interest rate regime change, where there was a sponsor in particular who went out, got out ahead of the issue, went to their investors, pitched the deal, explained the situation, and basically, I think was able to raise pref at 12%. And you can ask anyone, to be able to get rescue money essentially or high leverage pref at 12%, that's really, really attractive.
I mean, that's better terms than normal pref.
Correct.
Yeah, I mean, we borrowed pref for one deal ever. Oftentimes we get asked all the time, oh, would you take pref? Can I invest in pref? The answer is no. We will get it from our lenders that offer it for a very good rate to lever up the deal in that way. But to get 12% pref is quite impeccable. So good for that person.